Welcome to the Explainer. All right, let's talk about price action trading. It can feel, well, super complicated, right? But what if I told you the secret isn't about memorizing a ton of stuff? What if it's actually about understanding a simple story? Today, we're going to break down a really simple, profitable three-step framework that does exactly that.
So many traders get completely lost because they're told, hey, you just need to memorize all these candlestick patterns. The engulfing bars, the pin bars, all that stuff. And yeah, those are useful tools. But the real key, it's not about spotting one isolated pattern. It's about understanding the bigger story the market is telling you. It's about asking why the price is doing what it's doing.
And this is where most people go wrong. They treat the market like it's a dictionary full of random words. They see a pin bar, and bam, they jump right in. But without any context, that's just a recipe for disaster. What you really need to do is read the market like it's a story. You've got to understand the plot, the big picture, before you even think about looking at a single candlestick.
So what's the solution to all this guesswork? Well, it's a simple three-step framework. And what this does is it turns trading from this emotional roller coaster into a clear mechanical process, something you can actually repeat time and time again.
Honestly, the whole thing just boils down to answering three simple questions. And this is critical. You have to answer them in this exact order. First, direction, then location, and only after those two do we think about execution. Get that order right, and I promise you everything else will start to clip.
Okay, let's dive into step one, direction. Think of this as finding the main plot of our story. This right here is the foundation for every single trade you're going to make.
So the very first question you have to ask yourself is this. Who is in control of the price right now? Is it the buyers or the sellers? Are we in an uptrend or are we in a downtrend? It sounds simple, right? If buyers are in charge, you're looking for buys. If sellers are in charge, you're looking for sells. That's it. Now, how do you figure this out? You zoom out. You look at a higher time frame, maybe like the 4-hour chart, to get that big picture view. What you're looking for is something called a break of structure. All that means is when the price clearly pushes past a previous high or a previous low. When you see that, you found your swing range. That's basically your playground, the area between that last low and high. And this is so important because it filters out all the random noise and gives you one clear area to focus on.
All right, so we've got our direction, we know who's in charge. Now we can move on to step two, location. This is all about finding the absolute best price to get into a trade.
Look, you never ever want to enter a trade when the price is just kind of floating around in the middle of nowhere. That's a super low probability move, and your risk to reward is just going to be awful. Your job isn't to trade all the time, it's to be patient and wait for that perfect A-plus price.
I want you to think about the market like it's a store. You wouldn't buy a TV when it's at full price, right? You wait for a sale. It's the same thing here. You only want to buy when assets are cheap, when they're on sale in what we call the discount zone. That's below the 50% midpoint. And you only sell when things are expensive, when they're in the premium zone. It's a really simple concept, but it makes sure you're always trading from a place of value.
Okay, so once you know if you're shopping in the premium or discount zone, your next job is to find a specific point of interest, or POI. Think of this as a hotspot, a high probability area where the market is likely to have a big reaction. This could be a demand zone where buyers showed up in force before, or a supply zone where sellers slammed the price down. And then you wait. You patiently wait for the price to come back to your spot.
Okay, and I mean only, after the price has reached your special location, your POI, do you even start to think about the final step, execution. Let me be clear. If the price isn't at your spot, you shouldn't even be looking at the charts. Seriously, walk away.
All right, prices hit our location. Now is when we zoom in. We drop down to a lower time frame, maybe the 15-minute chart. And here's the thing, we're not guessing anymore. We are looking for very specific, concrete signals that basically scream at us, hey, it's time to go. And this right here, this is your non-negotiable checklist. You need to see all three of these things happen. First, you need a strong rejection candle. Think of a big, powerful engulfing candle or a sharp pin bar. Second, you need a break and close, which just means a candle actually closes past a key level, confirming your direction. And third, you need to see a failure to continue, where the other side tries to push the price back, but they just run out of steam. You need all three. One or two isn't good enough. All three, or it's no deal.
But listen, having a great system like this, that's only half the battle. You want to know the real secret, the true holy grail of trading? It's not about knowing when to get in. It's about having the discipline to know when to stay out, to do absolutely nothing.
I mean, this quote just says it all, doesn't it?
The hard part isn't spotting the good trades. It's ignoring everything else. True, lasting profitability comes from having the rock-solid discipline to wait for those perfect A-plus setups and just letting all the mediocre ones go by. Remember, you're a capital allocator, not a button clicker.
So what's the bottom line here? You have to have strict, non-negotiable rules for when you stay on the sidelines. Is the price in the middle of nowhere? Don't trade. Do you have all three confirmations? If not, don't trade. Does it just look good but doesn't actually meet your checklist? Don't trade. You have conflicting ideas about the direction. Absolutely do not trade.
Think about it like this. A really good trade, an A-plus setup, should be so obvious it practically hits you like a truck. It should check every single box on your list, no questions asked. If you have to squint, if you have to wonder, if you feel even a little bit confused, that's your sign. It's not an A-plus setup. And that means you pass and wait for the next one.
And that really brings us to the final, most important question you have to ask yourself. Are you trading the market, or are you just trading your perception of it? See, having a structured system like this, it forces you to trade what's actually happening on the chart, not what you think is going to happen or what you hope will happen. It takes your ego completely out of the equation and just lets you trade the cold, hard reality of price. And that, right there, is the key.